What is going on, traders? It is JB from FFT Trading, about to give you another masterclass in conquering the financial markets. Now, this video is very simple. I want to ask you guys a very simple question. Have you ever had the feeling when you're trading that you're simply just plotting levels or you're plotting patterns and you don't really kind of understand like the behavior of price? You don't understand how price is moving. You kind of just take those trades and maybe a part of you can sense that it's probably going to go against you, but because they tell you to follow your rules, do this and do that, you kind of just feel like all you're doing is plotting patterns on a chart and you want to upgrade that knowledge. Well, look no further. That is exactly what we're going to speak about today. And the reason I'm talking about this is because I remember when I was in that exact same situation. I was literally seeing so many trades win, but then so many trades also lose, and I could just see how I felt like there was something I was missing. And I really wanted to be a trader where I could look at the whole chart and really understand what's going on. So we're going to talk about a lot of concepts that can help you understand that, okay? But what you got to bear in mind is that it's going to take some practice. It's definitely going to take some research. But what I'm about to tell you is going to be able to be translated across probably every single asset class. You could probably do this with stocks. You could definitely do this with currencies and commodities, crypto probably as well. But as always, you just have to make sure that you're making it work for you and you're testing it. That's the most important point. You're testing it. Okay. So before we begin, guys, please drop a like, drop a comment and subscribe. Helps the channel out massively. So the first thing that we're going to talk about, okay, I think is very important, is market structure. If you don't understand market structure very well, then this is something that you're really going to have to improve. And for those of you that might be a bit confused, market structure is simply being able to look at this whole thing and be able to discern, okay, are we trending upwards? Are we trending downwards? Or are we in a consolidation? Okay, and that is all you're doing when it comes to market structure, because that is the only directions, those are the only directions that price is going to move in. Okay, now obviously you don't get price moving as uniform as this. You will get it looking very jank and very awkward, but that's where it comes in. So the first thing that you're going to have to basically figure out is find a level called the trend defining point. And now if you go to my pinned video, it explains this massively. But it is essentially, and this is like the backbone of everything that I teach, okay, being able to discern where the trend has shifted. If you're in an uptrend, it's the higher low that makes a new higher high. So if we have a situation like this where price makes a new higher high, the higher low that caused that higher high to be made is your trend defining point, meaning if price breaks below by here, it's shifted to a downtrend, making this the new trend defining point, and we can pretty much just assume that it's going to be continuing in that direction. Okay, so finding that level is very important. Why? Because what you can do is gauge the overall structure of the market. So when I say overall structure of the market, I mean something like this. Okay, let's say we got something like this, right? Okay, and then it goes up like that, we go by here, then it goes like this again, and then we go up. Okay, so what we can see is that we've got a higher low that formed a new higher high. That would make this the TDP. Okay, then we have another higher low that forms a new higher high, meaning that this would now become the TDP, this level by there. Okay, we then have this higher low making a new high high, which would make this the TDP. Okay, so when you find that level, or let's say you were by here, okay, and this would be your TDP because we haven't made a new higher high yet. The reason why this is an important level is because you can start to gauge where is the point in which if price breaks below this point, the trend has shifted. Okay, because you might have this sort of like little downtrend, okay, but overall you see the overall structure is going up. So you have all these little grim little disgusting bits in the middle. Don't know what I was trying to say there. You have these little bits in the middle that form little mini trends, and then you go up into your desired trend by there, and it just allows you to take out a lot of that noise. So let's go ahead and just quickly go over that. Okay, let's go ahead and use a different, let's go ahead and use actually no, we can just use this. I'll delete this. I'm just planning some potential trades by here. So if we go, say, I don't know, let's go and look by, one thing I have to point out as well is that when you're plotting this market structure stuff, on the higher time frames, it's going to be a lot more reliable, and on the lower time frames, it's going to be less reliable. Okay, so if we look at a situation like this, we can see clearly. Hang on. Sorry about this, folks. Okay. Well, on the 4 hour, when you have such a big, massive, like all this massive structure, it's kind of hard to gauge. You don't really need to go ahead and plot. Like, for example, if we start by here and we say, okay, this is a higher high, this is the higher low that caused that higher high. Let's go ahead and go to the bottom of the wick. Let's scan. Okay, this is now a downtrend. We've got this. What you find happening is that price will go ahead and break above. Okay, meaning that now this is our trend defining point. Okay, but as you can see, we're not really going to be waiting for price to get to here or there. We just want to see where the overall structure is. Now, sometimes, you know, like we can see by here, right? Hang on. Price made a new higher high right by there. So if we go back and find the lower low, that higher low that caused that, it's going to be around by here. Okay, so where it makes a new higher high right by there, meaning that the higher low that caused that higher high to be made. If you get a bit confused, you might think, is it this the higher low? Is that the higher low? You just see where the higher high is made, and then you just go to the lowest point. Okay, obviously you just assume the inverse when we're talking about downtrends. Okay, so a higher high was made by here, and then price broke above right by there. So that would mean that price has broken below by there, but as you can see, price has just kind of gone up and just, you know, done its thing. So it seems that that structure is getting violated a lot, right? However, this is just unique to gold, because gold is always rising pretty much, and we haven't looked at the daily time frame and whatnot. But essentially, if you're following that structure, you'll be able to find all these key points. And then what you can actually do is, right, if you can say, for example, if you're just looking by here, okay, if we're just looking at this particular example, right, and we saw that this was, we go back and find the lower low, the lowest higher low, sorry. There we go. Sorry if it's a bit confusing, go ahead and watch that video and explain things massively. So we can see that this is our higher low, TDP, this is the higher high. Now, we know that this is the level in which if price is trading above this level, we're still in an uptrend. But what we can pretty much do is say to ourselves, well, we can see that we've got this mini trend by here. We can follow that exact same, pattern, that exact same structure, and we can assume that price will shift and break these small trends while still remaining in this overall uptrend. So depending on how you want to trade that, it's up to you. But to be able to understand the markets more, you got to understand market structure in that direction. Look at overall structure, which is what as we spoke before, the overall structure is this kind of like overall direction in which price is going in, okay? And then look at the current structure. Current structure is if you are, say, for example, if you are in the middle of, like, by here, let's say, for example, you wake up in the morning and this is where the market structure is, you know that the overall structure is to the upside, right? Because the overall trend is going up. However, you can see currently we are in this small little downtrend, okay? So that's the difference between what I call current structure and then overall structure. Overall structure is where the overall trend is, okay? But current structure would be something like this, okay? Where we've got price clearly, right, trending downwards, okay? But overall structure is clearly pushing up because that TDP hadn't been broken, okay? All right then. How are we looking on the 15-minute? Okay, cool. Awesome. So we looked at market structure. Let's just piece that in. Okay. The next thing that we're going to be looking at, which is quite a broad topic, and by the way, I just want to add one more point. With market structure, you want to go across all time frames. Okay, I should probably put that in there as well. Actually, let's just talk about that. Okay, understanding time frames, right? When you look at market structure, if you want to have a nice little bit of practice, go and start on the monthly and then go down the weekly, then go down the daily, then go down the 4 hour, then go down the 1 hour, 50-minute, 5-minute, 1 minute, just as some exercises. You will be able to really see how price respects the overall trends in higher time frames, right? So the reason why this is important is because, yes, whilst we may have for example, price trading down by here, okay, you can see that overall structure to the upside. Sorry, the overall structure on gold on the daily is to the upside. So whilst you may see downtrends on the 4 hour or the 1 hour, you can see that overall we're going up. So maybe I want to just wait to see that shift and then take my trades. If we look at the weekly, we can see that gold is just all the way bullish. To be fair, gold's not the best example to use because it's just, yeah, it is what it is. Right, hang on, what time was that? 7 a.m. Okay, cool. So yeah, looking at time frames, this is a big topic, okay? We can look at market structure, and I guess that should just be in a league of its own, to be honest with you, because everything that I'm going to teach you is going to basically go down to time frames as well. So understanding price in terms of market structure, and also understanding price in terms of different time frames, okay, and how they work with each other. It all boils down to market structure. I'm not going to lie to you. Like, the biggest point of this is market structure, okay? And then the next point, okay, is candlestick behavior, right? So what do I mean by this? Well, I'm talking about, actually, let me just add one more point before we go in here, okay? So market structure, we're going to look at trends, consolidations, and key levels, okay? KL, key levels, right? I just want to add that in there because the reason why I'm going to say this is because when we look at candlestick behavior, we're going to see how price is reacting around key levels. So we're going to be looking at breakouts. We're going to be looking at what I call strong closes into levels, and I'll talk about that in a minute. And then what we're going to talk about is wick rejections. Now, wick rejections can happen without looking at, without going to any key levels, right? Because what can happen is, as we can see, for example, price just pushed down by here. If we just ignore this key level, we can assume that price had just stalled by there, right? If we go down by here, there's no key levels, price is just stalling and then pushes up, okay? So looking at candlestick behavior, the reason why this is important is because you could be in a situation like this. This was a trade that I took yesterday. It would pretty much look like this, right? Hang on. All right? Something along these lines, okay? Right? Let's say, for example, okay, I pretty much held it to this key level for a nice 1 to 2. But let's say, for example, you wanted to take this trade up by here. Now, I know that it eventually pushed up, but I want you to remain unbiased by here. Let's say you get to this point by there, okay? You can see, right, that price is failing to break, but you expecting price to push up, okay? This depends on your own rules and stuff, but the reason why candlestick behavior and wick rejections is very important is because you now have an opportunity to make an informed decision. You have wick rejections, you have a key level, you have evidence that price is failing to break, so therefore it might be wise for you to close your trade out. Instead of going for that 1 to 3, maybe we'll just close for a 1 to 2 or 1 to 2.1, whatever it is, okay? Now, you can also pair this in with your own learning, because we also know that when price has a consolidation, two things can happen. We're either going to be pushing upwards or we're going to be going downwards, okay? So that's just kind of for you to understand there, right? Breakouts. Why are breakouts important? Because breakouts are signaling momentum in another direction, okay? So if we see something like this, right, and we see a breakout from this green candle right by there, hang on a minute, let's go. We can see that we got this breakout by there on the 15-minute, then we can pretty much say that, okay, this is now showing me that the evidence is showing me that price wants to push up. Okay, and what do we have? We have this retest level, right? We've got these wick rejections right by there, which when we see that is evidence that price is failing to break and it wants to push in the opposite direction. So what you're doing is you're gathering evidence, okay? And that is going to be the basis upon all your decision making, right? When you look at all of these things in conjunction with your strategy, right, whatever strategy you have, if you feel like you're just a pattern trader, then incorporate all of these things in, okay? Look at the market structure, looking at trends, consolidations, key levels, understanding how the different relationships between the different time frames. If you haven't done any of that, then just spend honestly like 30 days just, I did this and it was so powerful for me. Like the amount of information I learned from the market was crazy, all because I went to the 8 major pairs and gold and just went from, I just looked at the activity for the day, I didn't take any trades, and I just wrote reviews about them. And I went in the monthly, the weekly, the daily, the 4 hour, and I saw things were happening on all different currency pairs that seemed to be synonymous with each other, such as evidence for price at key levels, looking at lower time frames, and how when, for example, the 1 minute shifts at a higher time frame key level, it might be quite likely that it's going to push off in that direction. Little tiny things. Okay. Now, when you're taking these trades, or you are being like a pattern trader, if you look at candlestick behavior and have a mind for evidence and thinking what is the highest probability of something happening right now, and the way you do that is you look at the trends, because we know that in trending markets, price is more likely to push in that direction. If we see, for example, wick rejections at key levels, we know that price is failing to break. But we also know that because of market structure, such as this level by here, if we have a wick rejection by there, okay, let's say, for example, you take your trade from this wick rejection, then you know that even though we're in an uptrend, it might be likely that price will come to this key level before then pushing off. So this is how you're able to make really, really informed decisions. And I just wanted to touch up on one final thing, this strong close into level, which you guys might be a little bit confused about. Let me just give you an example, okay? When I see something like this, okay, let's say, where are we? It's a bit hard to explain really, but it's pretty much when price closes like really strong into a key level, I'm of the belief that it's quite likely that price will just smash through, to be honest with you. So, I'm trying to find an example by here so I can show you guys, but it is proving to be quite difficult really. I'll link the music in the description too. Some bangers, mate. Absolute bangers. Yeah, I'm really struggling to find it, to be honest with you. Is that a good example? No, they're all breakouts. Come on, dude. Okay, here's a good example right by there. Okay, so can you see that price has closed quite strong into this level? If it has like no wicks, then it's quite likely, if you pair it up with some other evidence too, then it might go off in that direction. But that's something to go and look at yourself, because you guys have probably seen how that's happened before. But that's pretty much it, guys. And if you think about everything I've just said, okay, and really try and gather information, or have a strategy which looks to gather information from an evidence perspective, which puts the probabilities in your favor when in any kind of decision that you're making, I think what you'll find is your trading will really start to improve, and you will really have a lot of confidence and feel like, yeah, I'm happy to do this now, because in the past I saw that price was likely to not go any further, and I would just hold my trade and end up taking a stop loss. Now I can go and test something, which means that, okay, maybe there might be some reversal criteria basing off the evidence that this guy on YouTube was telling me about. What does evidence look like? And it's everything I've talked about. A trend is evidence that price will push a certain direction, right? Reactions at key levels are evidence that price will move in a certain direction. Wick rejections, breakouts, using higher time frame structure is all evidence, okay? And obviously you guys know that the higher time frame evidence you gather, the more reliable it's going to be, such as this, okay? I am now bearish on gold. That's my overall bias, okay? I can see the overall trend is to the upside, so I expect price to make new higher highs, right? When we're in uptrends, okay? But I also can see that the 4 hours looking like it's in a consolidation. I saw that this had a bearish wick rejection. I'm looking at the 15-minute time frame. I can see that the structure is up, and I'm thinking to myself, well, in a perfect world, I could probably take this trade all the way down by here, okay? Literally all the way down by here. So I'm planning it. I'm thinking to myself, what could happen? Well, okay, if price wants to make a new higher high and trade upwards, I'm going to wait for price to show me the evidence of that and break above. However, if it wants to trade lower, then I'm going to wait for price to break below this level, okay, and potentially, because I can see that I have a 15-minute, the 15 minutes looking a bit awkward, but I'm going to just mark this major key level, and I'm going to mark this major key level too, okay, and I might say to myself, well, I'm going to basically wait for price to trade lower because I've got the bias from the 4 hour time frame, okay? I'm planning on what could potentially happen, and because of that bearish wick rejection and that bearish candle, right, you can see on the 4 hour, I'm going to wait for price to show me that it wants to trade lower here, giving me a bearish signal so that I can therefore take some trades to the downside, okay? The way I'll do this is that I'll literally just take my entry on the 1 minute as soon as it gets below by here. However, I will also look at the evidence that the 50-minute gathers. If the 1 hour trades by here and I take a trade, and maybe the 50-minute closes back into this level, maybe I'll abort the trade. Okay, maybe I'll hold it and see if it wants to just, maybe if that was just a retracement. Okay, and you see what I'm saying? I'm going to piece together all the information, but one thing I'm going to always do is make sure that the probabilities are stacked in my favor. And once I've set that trade with a really good entry and a really good stop loss, I'm just letting it play out. Okay, because I've gathered all the evidence and I have good reason why this trade will work out. Okay, and let's say I get the direction, I get the push, then maybe I will wait for price to show me how it wants to react around these levels. Maybe I'll wait for it to get to here before going break even. Maybe I will, if I see another setup, maybe I'll close the trade out. Maybe I'll see how the 50-minute wants to react. If it's just going to reject this level, maybe it'd be wiser to close it in terms of having some nice profit and then taking the trade to the other direction. However, it could also break below by here, in which I have no reason to close the trade out and I will just ride it, hopefully past this level and follow the same process, right? See how it reacts and then potentially either close it, go break even or hold it there. So what you can see is that I'm not making any presumptions. I am just waiting on price to show me what it wants to do. Because ultimately we want to make money, right? We want to make money in trading. But we also, in order to do that, we have to be on the right side of the market more often than not. And the only way that you're going to do that is if you gather a lot of evidence and you take trades and make decisions based off that evidence. Doesn't mean that it's going to be right 100% of the time, 90, heck, even 80% or 70%. You might be right 65% or maybe less. But if you piece together things like risk to reward, right? Being able to capitalize on those winners and have a really good strategy, like my strategy is really good, not to blow smoke up my own butt, but grace be to Lord Jesus Christ who's given me this. And, you know, you can start trading with, you know, just a lot more confidence. And I want to leave you with one final thing, guys. If you guys are not feeling satisfied with your results or you guys don't believe in your strategy, then just go and rework it. Okay, don't worry too much about like people saying, oh, stick to the plan, stick to the plan. Sure, I agree, stick to the plan, but you've got to have a plan that you truly feel happy with. And in my opinion, that it looks like having trades that are very much in line with all the evidence that you're seeing. And it has, you know, you are able to take really safe trades, like the trades that you're taking. You're very diligent. You're not just taking random trades and taking losses for no reason. Every loss, in my opinion, should be worth it. What do I mean by that? I mean that every time you take a trade, you should be happy with the fact that that trade lost, because the thought processes, everything behind it meant that if it went in your favor, it would have been really good. You would have been able to make, you know, decent amount of money. It was a really good entry. It was a really good stop loss. You waited for the evidence. So you were happy to take that stop loss. And if you take those trades every single time, you'll be making cash. Trust me, right? But then you've also got to be able to know where to take your profits out, when to hold your trades, right? I've got evidence to suggest to me, right? When I set my trades, I always plan my key levels, and I'm not generous with it. I just go with the evidence. You see what I said by here? I said if I get a, you know, that my idea would be I'll be holding this all the way down by here, because I've seen that more often than not on the 4-hour major levels, price will travel through to those levels. So that's why I'll be happy to hold those trades or potentially add to them, potentially add to my trades, right? So that instead of getting a decent bit, I'm getting a really big bit, okay? So I believe, watch this video again, okay? Because we kind of went over strategy and then, went over like techniques and evidence, etc., etc. Then we kind of went into how you can really piece that into a strategy, which if you really kind of optimize every single bit, you'll be doing very, very well for yourself. And no matter if your trades win or lose, you know that over time I'm going to be blessed. I'm going to absolutely be blessed. So guys, that's me. I'm out for this one. Hope you guys have an absolutely amazing trading day. If you like this video, then please go ahead and drop me a like, drop me a comment, drop me a subscribe, and I'll be doing my best to be putting out this content as frequently as possible, trying to get some really good content out there for you guys. And like I said, hope you have an amazing time. Please subscribe, drop a like and comment. But I'll be leaving now. Have an amazing trading day, and I'll see you soon. Take care, guys. Bye for now.